I call this the DIY translator, okay? Because there's a lot of what they want you to do instead of what you want. Like I said, I'm an advocate, okay? A former client many years ago called me a crusader, okay? I'll cop to that. I really do believe this. And this is my belief system and also how it differs from the masses. And I'm not going to focus on all of them, but the stuff in yellow I do want to go over. And the first thing I'm going to highlight here is that it is all about proactive risk management. If you want to sum up Sun Garden and Rob and his career and his dad's approach, because just quick aside about my father, Carl Isbitz, who passed away 12 years ago, when he was 54 years old, the industry that he was in basically went kaput. And it was hard for him to be gainfully employed, even though he was very smart and very talented. But he had to figure it out, and he was messing around with the stocks and all that. And he really dedicated himself and made it so that the last 27 years of his life, died when he was 81. He was able to keep himself and my late mom going without having to go back to work. That is my inspiration, and it's why I expanded on what he did, not just during my advisory career, but afterward. So proactive risk management, we're going back a generation with this, and I've just sort of brought it to the next level. So how do we think of risk? You have to manage it through the process. For a lot of people, they ignore it until it's in the headlines. Simplicity. Simplicity, I thought, aren't you supposed to impress us with how smart you are? No, not really. Not really. I refer to it very simple as playing offense and defense at the same time. It's not convince them they need a buffer ETF, private equity, covered call writing ETF, high yield bond fund, whatever. Okay. I use levered and inverse ETFs, but they're not a sales pitch. They're not a sales tool to me. They're an investment tool. What is investment research today? Well, a lot of it has been screwed up because I think that the do-it-yourself investor has been grossly miseducated since the GFC. What's the GFC? Global financial crisis, 2007 to 2009. I started managing my first mutual fund during that time, so I got quite a lesson. Fortunately, we're a long-short fund, so we survived just fine. What's their way? It's a sales culture, and it's a sales culture on steroids, and it appeals to short attention spans. You can't help it in the iPhone age, but I think we can do better. Okay, what are markets? Well, to me, they're a tool. To a lot of people, they're a game. I don't like that. I listen to the market story. A lot of other folks want to be listened to because they're popular. Maybe this is why I'm not more popular. Goodbye me. Our attitude is you should be humble about this stuff. Humble, straightforward, and understand that the markets are bigger than us. And really, we kind of have to respect them, and we have to work with them. That's why I talk about they're a tool. They're not the end goal. Investing does not have to be sexy. It just needs to be useful, productive, and ultimately successful in the way you define it as a do-it-yourself investor. I see too much arrogance. So we could summarize it with, we're about help, we're not about hype. And in terms of education, we are trying to teach you to be a do-it-yourself investor. Yeah, you can follow my picks. I'll show you an example of how we do that later. But if this is the only reason to join the club, first of all, I think it's worth the price of admission, but it's not the number one and only reason that people join. And we know this because we've been running it on Seeking Alpha since November, and this is what people have told us. So I'm going to highlight a few other things here, and can certainly go back to any of this. This is investing to me. It starts with proactive risk management, then it's a philosophy, a process, a strategy, and tactics. The problem is people spend way too much time on the tactics without starting with this and then making sure they have philosophy, process, and strategy intact. That's why the GPS, kind of a first step for anybody, whether we know them or not, putting it out there. So my number one rule, ABL, avoid big loss. It's not ignore big losses so I can keep getting my fee. This has been in many parts of the advisory business, not all, but definitely many. This has kind of been the mantra. How do I know? 27 years I was an advisor. It hadn't changed that much. What drives modern markets? That's the main issue under an investment process. Well, it's algos, quants, indexes. Something like 80 or 90% of trading volume on the exchanges now is run by investors or entities that are indifferent to what they're buying. What does indifferent mean? In this case, if you're an index fund, you buy what you're supposed to buy. Assets flow in. In fact, I'll be reporting on this probably pretty soon because there's a lot of this stuff going on. Massive fund inflows drive stocks up. What are the biggest stocks? Well, you know them all by name, most likely, Mag 7, etc. More. That's great unless it slows down and turns around. This is one of the things where I think the charts are especially powerful, not to predict the future, but to help us understand how much risk we are taking to try to make money beyond T-bills. And that's where I always go to. So yeah, good stock picks, that's great for a week or two, and then one thing goes wrong. I mean, it has to be deeper than that. It has to be more fortified. So a philosophy and a process. And then when it comes to strategy, a couple of things I did want to point out. I don't use this term that much, and if you don't know what beta is basically, it's not exactly volatility, but it essentially says, okay, if the stock market is volatility of 1, are you above, are you below, et cetera. The Roar score is sort of loosely based on this concept that beta should be floated all the time. That means you don't have a 60-40 and you set it and rebalance it, once a year, whatever. Risk is something that I think should be managed at all times with as few moves as possible, but sometimes you have to be more active. And I call it playing offense and defense at the same time, or floating beta. The other thing, and maybe you wouldn't hear this from a lot of folks who run stock services, stock picking services, newsletters, but I mean, to me, especially now, and I wouldn't have said this 5 years ago and rates were 0, but wow, rates are like at recent historic highs. And so why not learn how to create a bond ladder and manage tactically around it? I mean, one of the biggest parts of my portfolio is exactly that. So we're not here to sell stocks and ETFs, even though we do research on them. We're here to help do-it-yourself investors do it themselves. And you're not going to hear this type of thing. Hey, buy this, it's got a double-digit yield. Don't worry about the risk. It'll take care of itself over 30 years, whatever. I mean, I hope I have 30 years, but I don't want to act like I have 30 years. Finally, tactics. And the one I'm going to point out, just because it's very familiar to people, there's a bunch in here. Stop loss orders. If you want to really understand how I think, okay, the only thing that stop orders stop is wealth building. All right? They don't protect your stocks when they fall. Why? Because if a stock is selling here and earnings come out, or there's some bad news overnight, and your stop order is here, it is going underneath. You're not selling here, you're maybe selling here, depending on what type of stop order you have. That, to me, I give that specific example because it is such a classic example of miseducated investing on the part of a lot of the folks who are offering services to the folks that are trying to figure this all out.